Hello everyone. So today we are going to understand a very important concept of finance. But before going into that concept, suppose you have gone to buy a shirt. Now you have a shopkeeper who will tell you what is the price of the shirt in case you are interested in buying a piece of shirt. Now that shopkeeper is there to tell you the price of the shirt. But now suppose you're feeling rich and suppose you want to say, okay, no, I'm not interested in shirt, I'll buy an entire company. Okay. Now, how do you know what is the price of a company? Do we have a person like a shopkeeper who's telling us what is the price of the company? No, not at all. So we don't have here anyone who will tell us what is the price of the company. So we need to determine, okay, now what is the value of the company? Now when you open the screen of Bombay Stock Exchange and see what is the price of different company, you see that certain companies have share price, suppose rupees 10. Some companies might have share price of suppose rupees 1000. Now you will say that okay, this company is very cheap to buy and it might be a rags to rich story. Or you might say that this 1000 rupees company is very expensive to buy, or the company has already grown a lot and there is not much growth left. Or you might consider it very expensive. So this is not how you have to deal with it. This is not the right way of understanding what a company is valued. So in order to understand the valuation of a company, you come across a very important concept called as market capitalization. So what is market capitalization? Market capitalization is a term that is used to determine what is the value of the company, or suppose if I want to buy an entire company right now, so how much do I need to pay for buying that entire company? Now the question arises as to how do we calculate market capitalization, or how is the market capitalization calculated in a way that we can understand what is the value of the company. So let's get to it on how do we calculate the market cap of a company, or what is the market capitalization of a company. So in order to calculate the market cap of a company, we multiply the share price with the total number of outstanding shares. Now this first part seems to be very easy to understand. The share price is nothing but the rate at which the stock of the company is being traded on the Bombay Stock Exchange or any other exchange, national stock exchange. So what happens here is, suppose today closing the price is 30 rupees, but 1 month before the price was 60 rupees. So the price went from 60 to 30. Now the total number of shares are ideally constant. So let's assume it to be constant. So if my total number of shares are ideally constant and if the price went from 60 to 30, so what do you think happened to the market cap? So don't you think that the market cap got reduced by 50%? Because my share price halved and this is same constant. So if this is constant and my share price halved, so my market cap also becomes half, right? So if my share price fluctuates, then my market cap fluctuates. So on a day-to-day basis, when you see the market cap of a company, it fluctuates daily basis on the share price. But there are two terms to the market cap. One is share price, and what the second one is the total number of outstanding shares. So now let's try to understand what is total number of outstanding shares. So now the second most important topic is what is total number of outstanding shares and how do we calculate it and what does it mean? Okay, so the total number of outstanding shares, it includes the shares of the company that are held by public, insiders and institutional investors. So it includes all the shares that have been given to either the public, like that is a common public like us, insiders. See, institutional investors might be LIC, HNI, means any institution that has bought the shares of the company, and insiders might be promoters or any other key person of the company. So all the shares that have been given either to the public or to the insiders or to the institutions, as like the institutions have put it their money by for buying the stakes in a particular company. So that is called as institutional investment, and institutional investors are the people who are buying those shares. So it includes all the shares either held by public, insiders and institutional investors. Now the main part here is it does not include treasury shares. Now what are treasury shares? Treasury shares are the shares that have been bought back by the company. So if the company has bought back certain number of shares from the market, so that is not getting included in the calculation of total number of outstanding shares. So it includes all the shares minus treasury shares. So all the shares that have not been bought back by the company, or which have been issued only to the public insiders and institutional investors and are with them only. So those are all included in the calculation of total number of outstanding shares. So now you have understand how we can calculate the market cap of a company. So now the important question arises here is, okay, I understood the market cap. So what's next? So now we categorize the companies on the basis of their market cap. So now how do we categorize the companies on the basis of a market cap? So let's get started to it. So how do we categorize these companies? So ideally the companies are categorized on the basis of market cap as large cap, mid cap, small cap. These are the three main categories. We also say something like a micro cap with very little market cap. But ideally, the three main categories on the basis of which companies are categorized are large cap, mid cap, and small cap. So these are the three main categories. Now, what does each of these categories means, and what does it imply if a company is categorized under a particular category? Let's discuss that in the next video. Thank you.